Welcome back to Alpha Recap, your quick aftermarket rundown from stockalpha.ai. We're wrapping up what happened on March 19th, and as always, if you have questions, you can reach us at stockalpha.ai. Tom, great to have you here.
Thanks for having me. It was an interesting session. Not a crash, not a full-on rally, but a clear rotation day.
Yeah, so what really stands out here is the split in leadership. Give us the headline numbers from the close.
The S&P 500 closed down about 0.25%, the Nasdaq 100 slipped about 0.33%, and the Russell 2000 was up about 0.2%.
A classic case of big cap tech giving back a little while smaller, more cyclical names picked up steam.
Right. It felt like traders were redeploying some gains from the mega cap growth names into energy, materials, and domestic cyclicals. Not a market-wide sell-off, more of a reweighting.
Let's dig into the main driver, oil. Where did crude trade, and why did that matter?
Oil pushed toward about $110 a barrel, and that really colored the tape. When energy prices move like that, it lifts integrated producers, services, refiners, you name it, and investors start pricing stronger profitability across the sector.
So higher oil equals better margins for energy companies, which in turn pulls money away from long-duration growth stories. Makes sense.
Yeah, that tracks. And beyond energy, materials, and mining picked up momentum too, because commodity cycles often move in clusters.
You mentioned rotation earlier. How do we know this was rotation and not a sign of broader risk aversion?
Good question. The key clue is the breadth. Small caps outperformed, while the cap-weighted indices lagged a bit. If it were pure risk-off, we'd have seen defensive sectors rally, not cyclicals and resource names. This was more tactical. Funds shifting exposure toward domestic, commodity-exposed areas.
Right. So not everyone headed for the exits. Some traders were just changing seats on the bus.
Exactly. And that ties into positioning. If small cap strength sustains, it could signal a true leadership broadening. If it fades, it might just be a short-term reallocation.
And tech? It didn't have a great day. Tell us where weakness concentrated.
Weakness was concentrated in the largest growth names that dominate the Nasdaq 100. There were pockets of strength. Software tied to logistics and AI headlines helped some names, but it wasn't enough to offset losses in mega-cap stocks.
So a bit of dispersion within the sector.
Right. Think of it as a pause for the big leaders while investors sniffed out alternative drivers of return.
Let's switch to policy. The Fed narrative stayed in the background. What's the takeaway there?
Markets are still pricing in hopes for rate cuts later in the year, but higher oil complicates that view. Commodity-driven inflation can make the central bank more cautious. So the hope for easing exists, but it's conditional on disinflation showing up in the data.
Got it. So the path to cuts isn't linear. It depends on whether energy keeps pushing inflation up, right?
Exactly. And remember, geopolitics can change the equation quickly. JP Morgan flagged potential complacency around Iran-related risk, which could add a premium to energy and knock sentiment around.
Let's run through sector highlights. Energy and materials led the day. Any other notable sectors?
Energy was the clear standout. Materials and mining showed momentum, and select real estate names caught bids tied to leasing strength. Utilities and communications were mixed, some defensive interest, but counterbalanced by higher input costs. Tech, as we said, was mixed.
Short reaction.
Big move in energy.
Short reaction.
Materials followed through.
Short reaction.
Tech took a breather.
Nice. Now, beyond sectors, there were some thematic and company-specific stories that popped up. Walk us through the top ones.
Cannabis policy chatter was a headline. Talk of uplisting and legislative moves like HR 7987 sparked interest. OFC conference notes about an optical supercycle helped lift optical suppliers and related materials names. We also saw activity in mining, industrials, and some small-cap biotech names after filings. And crypto-related institutional momentum nudged miners and fintechs linked to exchanges.
Cannabis and crypto in the same sentence. The market never gets boring.
No kidding. Those are narrow themes that can light up specific pockets, even when the broader market is mixed.
Let's explain one of those ideas for listeners. What do we mean by an optical supercycle? And why would that re-rate materials and suppliers?
An optical supercycle refers to a sustained period of investment into fiber optics and networking capacity. Think big upgrades to data infrastructure. That boosts demand for specialized materials and capital equipment, which lifts suppliers' revenues and margins. So when industry conferences confirm stronger demand, market participants start repricing parts of that supply chain higher.
Makes sense in plain English. More networks, more gear, more materials, better sales for the suppliers. Right.
Right, it's a chain reaction, and traders price that forward.
Let's touch technicals and positioning. What should traders and analysts be watching from a market structure perspective?
Key things. The divergence between cap-weighted indices and small cap performance. If small caps keep outperforming, it could mark a leadership shift. Watch oil for continued moves above $110 a barrel. And breadth indicators. Does strength broaden beyond energy and materials into industrials and services? That will tell you whether this is sustainable.
Okay, no trading advice, just the signals to monitor. We always want to remind listeners of that.
Exactly. Analysts note these are important signals, but they're not recommendations.
Heading into the next session, what items could set the tone?
First, follow through in oil and commodity prices. Second, any Fed speakers or data that change rate cut expectations. Third, sector catalysts like cannabis policy news or more takeaways from OFC. And lastly, geopolitical headlines. Escalation in the Middle East would amplify energy moves and could trigger broader volatility.
Solid checklist. Before we wrap, give us 3 quick takeaways from March 19th.
1. It was a rotation day. Large cap tech cooled while small caps and energy picked up. 2. Commodity strength, especially oil near $110 a barrel, was the main engine behind the rotation. 3. The Fed narrative remains conditional. Markets hope for cuts, but higher commodities make that path uncertain.
Great summary. Quick housekeeping. This episode is informational only. We're discussing market dynamics and data. We're not giving personalized financial advice or suggesting any trades.
Analysts note market risks and present these observations for info, not advice on buying, selling, or holding anything.
All right, that's it for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Tom, thanks for joining.
My pleasure. Talk to you next time.
Thanks for listening to Alpha Recap. See you tomorrow after the close.